Today we talk about inflation. Inflation is the rate at which general prices of goods and services rise and the purchasing power of currency falls. Most commonly used inflation indexes are the Consumer Price Index (CPI) and the Wholesale Price Index (WPI). Ideally, an optimum level of inflation is required to promote spending to a certain extent instead of saving, thereby nurturing economic growth. Rising prices are the root cause of inflation, and inflation can be categorized into two categories. First is demand pull inflation. When too much money chases too few goods, that is demand pull inflation. Let's take an example. Due to the recent ban on alcohol during COVID-19, too many people wanted to buy alcohol, which made liquor stores increase prices of goods. So there was too much demand for alcohol and the supply stayed the same. This is demand pull inflation. Cost push inflation is the second type. When cost of labor, land, capital rise. Example, increase in fuel prices leads to an increase in the cost to produce products and hence leads to an increase in price of the product. Why has Government of India increased excise duty on petrol and diesel when oil prices are at a worldwide low? Due to the COVID-19 crisis, the country is not running at a full capacity, which means labor and resources like plant and machinery are not being worked to the fullest. The Government of India is hence trying to use basic economic strategies combining demand pull inflation and cost push inflation to boost economic growth. The first measure the government took was use demand pull inflation through RBI repo rate cut. The second measure was to increase excise duty on oil, a type of cost push inflation, which pushes all prices upwards as transport costs form the basis of affecting a majority of costs in an economy. However, this will have a negative impact as business owners who are already saddled with debt, salaries, rent will have to bear a major brunt of increased costs. The government has now also increased MSP, that is minimum support price, so as to incentivize farmers. This may have some negative effects in the long run, however, it would definitely help by making more money for the farmers. Hence, in theory, inflation will increase productivity. This would encourage borrowing and lending, which again increases spending on all levels, as there will be more money in the market, which would increase consumption and boost economy. Thank you.